Hey everyone, and welcome. So, today we're going to tackle a question that I know is on every Bitcoin investor's mind, especially right now. Prices are hitting new highs, emotions are all over the place. It's a recipe for making bad decisions. That's why we're going to lay out a super clear, rules-based strategy for investing in Bitcoin, one that just takes all that guesswork and emotion right out of the picture. Let's jump in.
I mean, this is the classic dilemma, right? It's that constant tug of war in your head. On one side, you've got FOMO, the fear of missing out, screaming at you to buy before it goes even higher. But on the other side, you've got this nagging fear of being the person who buys at the absolute top just before a crash. It's a stressful loop, but what if there was a way to just step outside of it and use logic instead? So here's our game plan. We're going to start with the big picture strategy for these crazy markets. Then, we'll break it down into 3 simple, actionable steps: defining your buy zone, your profit zone, and, super important, your safety net. And to wrap it all up, we'll cover the golden rules of execution that really make this whole system click.
Okay, so to fight back against all that volatility and emotion, we're going to lean on a classic, proven method, dollar cost averaging, or DCA. But here's the twist. We're not just talking about blindly buying a little bit every week. No, this is about a disciplined, pre-planned approach to building your position with logic.
The goal here is really simple. We're going to use a precise 3-zone strategy, and we're going to execute it using something called spot limit orders. All that means is you decide on your prices ahead of time, you set your orders, and then you just let the market do its thing. You let it come to you. No more rage-clicking buy during a pump.
All right, let's get into the first piece of the puzzle. This is what we call the buy zone. This is where we get strategic about accumulating Bitcoin. Not when it's rocketing up, but during those small, inevitable dips and corrections that happen all the time.
And here's our first rule. It's simple. It's clear. We define our main buy zone as any price that is 5% below the current spot price. That's it. That's our target area for adding to our stack.
So, let's make this real. Say the current price is $86,253. All you do is multiply that by 0.95, or 1 minus 5%. That gives you a target buy price of around $81,940. And that's exactly where you set your limit buy order. You just set it and you wait.
And why do we do this? What's the point? Well, it's all about getting a much better average entry price over the long haul. You're basically putting a system in place to automatically take advantage of small dips. It's the perfect antidote to that terrible feeling of FOMO buying at the absolute top.
Okay, knowing when to buy is half the battle, but knowing when to sell, that's where true discipline is forged. So our next step is all about defining your profit zone. Honestly, having a plan to take profits is absolutely crucial for long-term success.
And just like our buy rule, our profit rule is just as clear-cut. We set our target to take some profit at 15% above the current price. This is our preset, totally unemotional level for cashing in some of those gains.
Let's run the numbers again. Starting from that same $86,000 price, you calculate a 15% increase. That sets our limit sell order at $99,191. When the price hits that target, boom, the order executes. No hesitation, no greed, no wondering what if it goes higher. Just clean, disciplined execution.
And why is this so critical? You know, people always talk about their paper gains. But paper gains aren't real. They're just numbers on a screen. This step is what turns those numbers into actual real capital in your account. It lowers your risk, and it gives you liquidity, cash on the sidelines to be ready for whatever comes next.
All right, now for what is maybe the single most important part of this entire strategy. We're talking about protecting your capital with the safety net. Look, even with an asset you believe in, like Bitcoin, you have to have a line in the sand, a point where you protect yourself from a really bad downturn.
And here's that number. This is the one that tells us the market might be making a major shift. A 30% drop from the current price, that's our critical risk threshold. If the price gets down there, that's not just a dip anymore. That's a sign of a serious correction, and it's time to play defense.
So looking at our example again, a 30% drop from $86,000 puts our emergency brake at $60,377. This is the price where you would have a stop limit sell order waiting. It's basically your preset instruction to the exchange to sell and protect your capital from any further, deeper losses.
So the whole point here isn't about getting scared by normal market moves. This is about pure capital preservation.
You have to think of this as your ultimate defense, your absolute line in the sand. It's what ensures that a really nasty market crash doesn't completely wipe you out.
Okay, so we've got the what and we've got the how, but now let's talk for a minute about the why. What's the philosophy behind all of this? These are the core beliefs that really make this strategy work over the long run.
I mean, the whole reason we're even talking about a long-term DCA strategy for Bitcoin is because of the big picture thesis, right? It's becoming digital gold, a genuine store of value with a hard cap supply that nobody can just print more of. And now with huge institutions getting in on the action through spot ETFs, its place as a core asset is just getting stronger and stronger.
Seriously, if you remember just one thing from this entire explainer, let it be this. In a market that is obsessed with speed and hype and instant gratification, your patience is a superpower. It is your single greatest edge. This whole strategy falls apart if you don't have the discipline to just wait for the market to come to your price. And this right here perfectly shows how you actually use that patience. A market order is just pure impulse. You hit the button, you buy at whatever the price is right now. But a limit order, that's strategic. You name your price. You tell the market, I'm only buying if I get this price or better. For a disciplined strategy like this one, limit orders are really the only tool for the job. So I'll leave you with this question. The numbers, the zones, the types of orders, at the end of the day, they're all just tools. The real secret to success in this game isn't finding some magic indicator or perfectly timing the top or bottom. It's just having the discipline to make a plan and, more importantly, having the conviction to actually stick to it, no matter what. Is that your most valuable asset? Something to think about. Thanks for tuning in.